Was he hinting that there were not enough reserves in the banking system to avoid liquidity challenges? All right, I'll stop beating around the bush and I'll get straight to the point. Powell implied that the Fed may be approaching an end to quantitative tightening, or QT, in coming months. Now, this is a bit of a tricky topic, and I know it makes eyes glaze over, but stay with me. I'll try to explain. The market, you see, is thirsty for Fed easing. So this little comment from Powell got everyone buzzing, at least in the econ nerd crowd. Let's unpack what it means and why it even matters. First, what is quantitative tightening? Well, QT is the Fed removing liquidity from the system. In practice, the Fed lets its treasuries and mortgage-backed securities run off or sells them in the open market. When a private investor buys those securities, cash leaves the system. Less cash means higher yields. Higher yields mean the Fed is pressing on the brakes. The opposite is quantitative easing, or QE. That's when the Fed buys treasuries and mortgage backs, paying cash and adding liquidity. That pushes yields down. QT is draining the pool and QE is filling it. Now, fast forward to 2020, the pandemic era. Remember that? Well, the Fed slammed on the QE gas pedal to save the economy. Its balance sheet exploded. That balance sheet is called the System Open Market Account, or SOMA. And yes, it still looks bloated today compared to pre-COVID levels. When the Fed began QT in 2023, it wasn't selling securities outright, it was letting them run off. When a treasury matures, the treasury pays the Fed back, and that money vanishes from the system. Bank reserves fall. It's quiet tightening. No traders even needed. Now, Powell says ample reserves. That's the Fed's favorite fuzzy words. Ample means enough for the banking system to function smoothly. If reserves drop too far, funding markets get a little nervous. That's kind of what happened in 2019 when repo rates spiked and the Fed had to step in. You probably don't remember that, but I do. Powell certainly does, and he doesn't want a repeat. You can't stop a treasury from maturing, you see, and time keeps marching on.